There's also bonus conditions. They might say you can get up to 5% interest, but only if you deposit a minimum monthly amount. Sometimes it's 200, sometimes it's 1,000. If you make no withdrawals or if you use a linked debit card, there's some where it's like you have to tap your card 5 times. Like there's heaps of different conditions. If you miss one of them, your interest could fall back to 0.1% or not much at all. Hello and welcome back to the Get Rich Slow Club. I'm Tash and I'm here with Anna, and today we are talking about how transparent banks are. I was looking for, sometimes I do a monthly savings account wrap-up post to say the highest interest savings account, and I was getting a little bit annoyed at how hard it was to sometimes find not just the information of the interest rate, but the criteria, how long it lasted for, what all these other things are going on. And if I can't find the information really quickly, I can't imagine how hard it would be for some other people if you don't know all the jargon. So I thought it'd be fun to talk about the ratings I gave some banks, and also just what it all means and things to look out for. Do you have a money win or loss for us?
I've got a money neither win or loss, just a money consideration.
Mm-hmm.
So for those of us who have little humans that start kinder, here in Victoria, kinder is free. So you can go to the kinder program, which is for 3-year-olds or 4-year-olds. And the thing is, it's technically free. Otherwise, it'd be like a couple $1,000s because that's what it was previously. But in order to do so, it's kind of like putting your kid in school. So you still have the school holidays and you have to pack them a lunch. Whereas if you leave them in a childcare center, that is all covered. And then you don't have to deal with the school holidays. So there's just a lot of considerations that are happening this week about what we're going to do with one of our kids. And it is a hard situation to be in, especially for parents who don't have a lot of wiggle room when it comes to finances. This situation might be better because it's cheaper, but then all of the lunches you have to pay. What are you going to do during school holidays? Are you going to take leave? Are you going to work? It is really hard. And it's different when you're working with a 3-year-old versus a 5 or 6-year-old who's in school. So I'm just feeling it right now. And I totally know we have some listeners who have kids, but it is the mental load of trying to figure out the best thing for your family and financially is always a really hard one. So that's that.
Spun it around for a bit because as a kid, I loved pupil-free days. But then talking to you, you're like, we were trying to do something every Monday. And then you're like, oh no, it's a pupil-free day this week and it's fine. I can make it work. But it's just interesting how as a kid, you're like, oh my God, it's a free day. But you're like, oh gosh, I wasn't, what? School holidays was just there. Why do we have another day off? How do I plan my week around this?
I mean, it's fun. I have a really good time with my kid. And also I'm really fortunate because I work part-time and I work from home. So it's easier for me. But there are so many parents who don't work from home, who work full-time. So all of a sudden, it's a good 10 days, 11 days that you're like, oh my gosh, what am I doing with my child? Oh, and if you put them in the school program, that costs money too. So I'm just, kids ain't cheap.
Mm-hmm. Little book plug.
Yeah, book plug, not on purpose. But yeah, it's just juggling that right now and trying to figure out what's the best thing. So yeah.
Good luck.
Thanks.
You're doing well.
Doing all right, but yeah.
So we thought this episode was important to do because I've noticed more banks are kind of doing the introductory rates where you can get quite a high interest rate for 3 to 4 months and then it will drop to quite a low rate sometimes, or there'll be a really great rate, but there's heaps of things you have to do to then meet the criteria to get that bonus interest when maybe it would have been better to take a slightly lower rate and be able to meet it every single month.
Yeah, this is why we want to just talk about interest rates in general first, and then we'll just dive deep into the different saving rates and things to consider. So why you should pay attention to interest rates is obviously the higher your rate, the more your money grows, right? So we want to be compounding our money. We want to have more money, right? We want it to earn money. Now, when it comes to mortgages and loans, this also directly affects your payments. So a small increase can cost you thousands of dollars over time. And ideally, you would want a low interest rate when it comes to your mortgage or your loan, right? You don't want to be paying as much. And obviously this changes as you have a variable loan. So if you have a variable loan, it means it varies, it changes, it goes up and down. Or if it's fixed, it stays at the specific thing.
So we're just going to go through some of the jargon and then I will give you my ratings on 4 banks and how they presented their interest rates, because it's all well and good to be like, we understand the interest rates, but some banks are not very good at telling them to you directly. So I rated them in an Instagram post. I'm going to read these out because I feel like we can almost consult to banks and be like, what are you doing? Yeah. It's a future career option. But first, general things to look out for. Sometimes they say things in basis points and sometimes it is percentages. So 1 basis point is 0.01%. When you hear a 25 basis point increase, it means a 0.25% rate change. I hate that I know that there's different things, they mean the same thing, but I hate especially when the same place will quote some in percentages and some in basis points. I know Stake used to do this. I haven't checked them recently, and that kind of annoyed me.
I think the big thing is the more we can confuse people, the more, what's the word I'm trying to say?
They want to confuse people to make more money.
Yeah. Yeah.
If you don't understand, you won't be like, wait, actually, is that a bad deal? Are you ripping me off? Because they're making you do the mental maths. Your brain has to stop and be like, oh, let's convert that so we can compare it.
Yeah.
But if you could present something in one way and something in a different way, it's hard to compare them.
Or it also sounds better, right? Like it sounds better if you're like, it's only 0.01% or 1 basis point or 25 basis points versus 0.25%. So the way something looks also looks more appealing or less appealing depending on what it is.
There's also, I mentioned this just earlier, but introductory versus ongoing rates. So some savings account may have really high introductory rates and then they will often drop to a much lower rate. It's always important to check the ongoing rate or how easy it will be to move. Sometimes there's the condition where if your balance drops, you won't earn the interest that month. You'll be like, oh yeah, I'll get the high rate for 3 or 4 months, but you'll actually lose a month when you move it out, which is hard.
Yeah. And then you have to do the math on that. Is it worth it to keep it there for 3 months and then move? Or is it better just to leave it and find something that's a bit lower? All this mental math is hard.
There's also bonus conditions. They might say you can get up to 5% interest, but only if you deposit a minimum monthly amount. Sometimes it's 200, sometimes it's 1,000. If you make no withdrawals or if you use a linked debit card, there's some where it's like you have to tap your card 5 times. Like there's heaps of different conditions. If you miss one of them, your interest could fall back to 0.1% or not much at all.
Yeah.
How to find the best rates. You can use comparison sites like CanStar, Finder, Rate City, or Info Choice. They don't always rank them in the best order. Sometimes they are biased.
It's also worth going to Reddit. Reddit also has...
Yes, I was about to say that.
Oh, were you going to say that? Yeah. So Reddit often has basically a document that people are keeping track of and it gets updated regularly. So this is also a really great way to see what suits you.
Yes, it's volunteer runs. There might be things that are wrong, so always double check, but it's like pretty detailed. I always just Google like Reddit savings spreadsheet and there's a post where someone's mentioned it.
Mm-hmm.
I think it's actually called like the savings account leaderboard or something like that, but they rank them and they also mention some of the conditions too, which is great.
Yeah, of course, go to the website of the bank that they're talking about and just make sure that it's accurate. But it's a really good way to kind of filter down what you're specifically looking for.
Okay, I'm going to rank 4 banks. This is just for my monthly post that I was doing and I was getting a little bit annoyed. So I've got best to worst. So I gave Macquarie.
Hold on. This is best to worst
of transparency.
Interest rates? Transparency. Okay. So just before Tash shares this is not a recommendation. This is just us talking about transparency specifically to understand the differences between them.
Yes. And to see how quickly I could find the information that I wanted, because I just wanted to be able to say, this bank has this percentage and this is what you need to do for it. So Macquarie, I gave them a 5 out of 5 because they weren't hiding anything. They had the interest rate and then they had the terms and conditions like literally straight underneath it. And then they had the variable rate literally next to the bonus rate. So I was like, great, I can see it all on the same page. I didn't need to scroll. It showed the time frame, everything. That was great. At the time of posting, so it was saying that the intro rate was 4.85% per annum. So the variable welcome rate for 4 months on balances up to 250K. And then the variable ongoing rate was only 4.5%, which is like not that much of a drop. Some of them drop really quickly and that's on balances up to $1 million. So that's like pretty clear. These numbers are when I posted back in June, so they might not be completely accurate now, but we're just good using this as an example to show like how banks present information to you and like the difference between them. Because sometimes it's like a really high intro and a low ongoing, whereas Macquarie actually had like a higher intro, but actually a really decent ongoing rate. Mm-hmm. The next one, Bankwest, I gave them a 3.5 out of 5. So they said a 5.15% interest rate, which sounds great. Variable introductory rate for the first 4 months and balances up to $250,000. But you had to scroll down to find the ongoing rates. It was written clearly, but it wasn't obvious what it reverted to.
So do you know what the ongoing rate was, or you had to actually click and go into it and find it?
You had to go to a different page.
Oh, so you don't know what it is.
I can't remember now.
Yeah, because it's on a different page.
Yeah, it's far away. Rabobank, they had a really high interest rate. I hadn't really heard too much about them, but their interest rate was 5.15%. I rated them a 2.5 out of 5 because you had to scroll down to find the ongoing time frame. They vaguely mentioned the ongoing high interest rate, but you had to keep scrolling to find it. So they have like this really big number and then they've got this small text that kind of explains it later on.
Oh, so much reading, so much scrolling.
Yes, and that's fine, but like you really want to be able to see the conditions and what rate it's moving to and when.
Mm-hmm.
St. George, I wanted to give them like nothing, but I gave them a 1.5 out of 5. They have the biggest, boldest, like 4.75 for their intro rate, but this is like the biggest word vomit thing I've read for a while. So it says you can earn up to 4.75% per annum with a variable base rate of 0.4% per annum, a variable bonus star rate of 4.25% per annum, and an extra 0.1% per annum to your variable bonus rate for the first 3 months when you open online.
What?
Like, why
What does that even mean?
Why is there a variable base rate and a variable bonus rate and an extra bonus rate or an extra bonus to your variable base rate?
My brain, like I have to reread that.
Yeah. Like that's not just like base and bonus. It's like base, bonus, and bonus.
Oh my gosh. And like, when do you get the base and when do you get the bonus and when is it all together, right?
Yeah. So the base rate was only 0.4%.
Oh, that's very low compared to 4.75.
Yeah. So the variable bonus rate was 4.25%.
But there's a star, so who knows what you need to get for that bonus.
And then is it like only the extra 0.1% that's for the first 3 months, or is it the 4.25 for the 3 months? Like it's not sure where it ends and what continues on.
Oh my. Tash, do you have anything in a high interest savings account?
No, not anymore because I purchased my offset, but I did until recently.
And what were the things that you looked for?
One that had no conditions because I was sick of the conditions because I was paying with stuff on my credit card. So I didn't want to have to do the 5. I used to try and maybe it was Westpac a while ago. I can't remember which one it was, but I used to try and do the 5 transactions. Maybe it was ING just to get the bonus interest rate back then when it was more worth it. But I ended up using the ANZ Plus app because you could get 4.5 back then with no conditions.
Right.
Yeah. I think you just couldn't take money out, which is fine, but there was no you didn't have to add. They might have amended it now where you have to add some kind of money, but back then when I got it, there was no conditions in terms of using a card or adding a certain amount of money every month.
Yeah. I think one of the biggest things for anyone who's looking at a high interest savings account is to think about how you're going to use it. Because everyone has a very different need, right? Like at one point when I sold my apartment, I wanted to put money into a high savings interest account, but I didn't want to have any kind of conditions. So I was looking for one where I could just leave it and just leave it, not have to take anything out, not having to add anything to it. So I was finding one that worked for that amount. But then there's other times where that's not the case. And I know I need something to move money in and out from. So if I know I'm going to meet the conditions and if there's a higher interest rate, then I might potentially go there as well. I know a lot of people don't want to keep moving their banks around. So one of the things that I've also done is I've kept one basic bank for just keep it open. And so cash or payments can go into there. And then I'll have that other account that I will then transfer it over to so that I do have my home-based bank account, but then taking advantage of these other bank accounts as well. Have you done stuff like that?
Yes. I used to automate transfers. So some of the conditions were you just had to grow your account, no minimum. So I would transfer $1 every month, just automated. Or sometimes if it was you had to meet $1,000 and I would change my pay to get paid into that one and then just transfer it out straight away. So I have done things to try and meet those. The only ones I really struggled with was the 5 card transactions because then I had to be quite mindful of if it wasn't my main bank because I was using credit cards and stuff like that.
Yeah.
But the transferring money in is fine because you can automate that and transfer it straight out again.
Yeah. It is, if you are using a credit card, it's much harder to remember to use a bank card.
Yes. And I do that sometimes and some people don't take Amex. But back then I think I had a Westpac credit card as well. So I would just use that all the time. For my business account, I've just moved it to one that has the highest interest savings account. So this is a slightly different, but NAB seems to be the gold standard, which makes no sense to me because Macquarie has the best business savings interest that I can find.
Yeah, they do. Yeah.
Yeah. So I've moved my savings to Macquarie for my business, well, some of them, and then NAB's still my transaction or whatever. But yeah, it's generally, will I meet it? Is it easy to meet the criteria? If it takes me half an hour to set it up, but then I don't need to do stuff ongoing, that's easy mentally because then you've removed the mental load of remembering the card transactions, or you just pick something that's a little bit lower.
Yeah. I'm always surprised with how many people have ING because the Barefoot Investor suggested the ING. And I remember a good 8 years ago, there were no conditions. And little by little, it's now you need five transactions. Now you need to have this much there. It needs to grow. It needs to all of the stuff. So it is worth shopping around, looking for what suits your needs instead of just staying where you've been for the past 8 years.
Yes, ING is an interesting one because you can get the 5%, but currently at time of recording, it's the standard variable rate of 0.05%, and then the bonus is 4.95%. And the conditions are deposit $1,000 into your personal ING account in your name, make 5 transactions that are settled and not pending. That can be interesting because sometimes they're pending for a while if you make them at the end of the month, and then grow your balance each month. So if you forget one of those things, you'll get 0.05% instead of 5%.
Yeah. What a challenge when you're trying to figure all of this out, right?
Yes. But yeah, it's if you bank with ING, you might be oh yeah, of course I'll make 5 card transactions. That's me at this the first week of the month. But if you don't actually use them, then yes.
Yeah. So moral of the story is definitely do your research, read the fine print, understand your needs and what actually works for you.
Yeah. And if you work at a bank, look at your marketing and say, am I explaining this properly? Can I maybe it's not your role, but can you be hey guys, this is actually really confusing. Should we list this in a better, more transparent way? Because I feel like there's some work for the banks to do here.
But if we keep people confused, then maybe they'll use our products.
And get no interest rates. And then, we'll make all the money.
I know, that's the challenge. And sometimes, banks have to just do what they do. And the thing is, people might not know, not know that there's an ongoing rate or a bonus rate because they sign up and they see the big 5.15 or whatever it might be and then don't read the fine print, right?
Or it changes and you didn't read the email.
Yeah.
So check that you're actually getting your interest every month as well. Because you might be like, I think that happened with me with maybe the ANZ one or something, but something changed. And I noticed I got like 1 cent for the month. And I was like, wait, what happened there? And then I had to go back and be like, oh, wow, they've added new conditions now.
Yeah.
Because it's variable. So they can change whatever they want.
Yeah. So keep on top of it.
Yes. Yay, fun. Bye.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Anna Christina.
The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging.